One of the biggest tax myths I hear every single year, especially as we get close to year end, is the idea that you should buy something just to write it off. People rush into spending because they think a deduction is some magical discount. Let me make this very clear. A write-off does not mean free. It does not mean you got a discount. And it definitely does not mean you should spend money you did not need to spend. If you are new here, I am Noura Masri, tax strategist and best-selling author. For more than 25 years, I've helped business owners, professionals, and mid-level companies protect their cash, reduce overpayments, and avoid the costly mistakes that lead to IRS problems. And today, I'm breaking down the 3 most common things people buy in November and December thinking they are saving on taxes when they are actually losing money. Let's go right in. Write-off mistake number 1. The brand new car. I hear this constantly. My accountant told me to buy a car before December 31st. It will lower my taxes. No, that's not how this works. If you don't actually need that car for business, here's what just happened. You spent $60,000 to $90,000 to save maybe $5,000 to $15,000 in taxes. Your bank account is still down tens of thousands of dollars. You just got rid of your money. And guess what? Most people don't calculate the second hit. Insurance, interest, maintenance, and the list goes on. Remember this rule. A deduction reduces your taxable income. It does not keep money in your pocket. And what we want to do is really keep the money in your pocket. The only time buying a car makes sense, it's when it is really a business asset. You need it for your business. You are using it daily for operation. It helps you generate revenue. It's necessary to grow or maintain the business. Otherwise, it's not a write-off. It is a write-out. Money leaving your business forever. Write-off mistake number 2. Office equipment you do not need. New laptops, new cameras, new chairs, all under the magic sentence, it's a write-off. Here's the truth. A deduction does not turn a want into a need. I know you're thinking you want to save in taxes, but also, don't you want to keep your money with you? If the equipment does not improve your productivity, help you serve clients better, speed up your workflow, directly supports revenue growth, then it's not a business investment. It is clutter. Every year, I see business owners losing thousands of dollars because of impulse spending. This cues as tax planning. You want a smarter strategy? Buy what your business needs. Deduct what's legit and keep your cash where it belongs, with you. How? Move your cash from your right hand to the left hand to avoid tax legally by a real tax planning. Write-off mistake number 3. Business travel that's really a vacation. This one gets people in trouble more than any other. Someone decides to take a trip, add one meeting, save a receipt, and magically calls the entire thing business travel. That's not how it works. If the primary purpose of your trip is not business, the IRS can and will disallow the deduction. And here's the part people don't realize. Not only do you lose the deduction, you can also face penalty, interest, accuracy-related adjustments, and in some cases, audits. For mid-level companies, this can turn into a very expensive problem fast. Real business travel requires a business agenda, a documented meetings, a clear purpose, reasonable and necessary expenses. Not a weekend getaway with a laptop in your backpack. If the business purpose isn't obvious, it's not deductible. It is that simple. The real truth about tax strategy, here's what most people never hear. Wealth isn't built by spending money to save money. You don't win the tax game by buying things. You win by planning. The smartest tax strategy is simple. Spend money only when that grows your business. Deduct what's real and legit. Avoid year-end panic spending. Protect your cash flow and make decisions based on return of investment, not FOMO. If your accountant is telling you to spend everything before year end so you don't pay taxes, then you don't need a new car. You need a new accountant. Your goal is not paying zero taxes. Your goal is keeping as much of your money as possible legally in your pocket. And that requires strategy, not shopping. Before you fall into the year-end trap of buying things you don't need, remember, a write-off is not free. A deduction does not replace your cash. And spending without a strategy costs you far more than taxes ever will. If you want more year-end tax tips, strategies, and updates, make sure you subscribe, turn the notifications button, and watch the videos linked below. I am Noura. Thank you for watching. See you later.